Ethereum, ETH, the cryptocurrency that powers the smart contract-enabled Ethereum blockchain network, has mounted a decent recovery on Thursday in tandem with a more risk-friendly tone to trade in traditional asset classes. US stocks are up and the US dollar is down. ETH/USD was last changing hands in the $1.250 area, up 0.75% in the last 24 hours, and is up about 2.5% versus weekly lows in the $1.220 area. However, ETH is still trading lower by about 4.5% versus its early weekly highs just above $1.300. Ether bulls have struggled to reclaim control since the abrupt collapse of major cryptocurrency exchange FTX roughly 1 month ago. Prior to the exchange's implosion, ETH has been trading in the $1.500 $1.600 area. Since the collapse, rallies back to $1.300 have continually been sold by the market. Data from crypto analytics firm Santiment regarding the realized profit and loss of ETH tokens moving on the Ethereum network show a spike in traders selling at a loss in wake of the FTX collapse. Selling from so-called weak hands might well continue to weigh on ETH's price in the near future. Looking at ETH price over a shorter time horizon, the cryptocurrency appears to be heading lower within the confines of a bearish flag. ETH is currently testing the upper bounds of this flag structure, however, and looks as though it could break higher towards $1.300 once again. A further recovery in US stock markets and further weakness in the US dollar as the end of the week approaches, perhaps aided if Friday's US inflation figures come in softer than forecast, could be just the catalyst that the Ethereum bulls need. Technical buying may also help in wake of ETH having recently found support at its 21-day moving average in the 23.6% Fibonacci retracement level from the post-FTX collapse lows under $1.100 back to the pre-FTX collapse highs in the $1.600s. An ETH recovery to $1.300, and even a break above this level, won't do much to change the cryptocurrency's longer-term technical outlook, which remains bearish. Indeed, ETH remains locked within a downtrend that has been in place since summer 2020 and looks ultimately likely to cap any near-term ETH upside. For ETH to get out of the current bear trend, it would need to muster a sustained break to the north of the $1.500 area, a further 20% up from current levels. To get here, ETH would need to get above all of its 50, 100 and 200 EMAs. Most longer-term bears will likely remain confident in their strategy of selling meaningful short-term ETH rallies. While longer-term price speculators might be bearish, on-chain data shows that whale hodlers remain confident in the ETH's long-term prospects.